shift a little bit away from what's happening on Wall Street, and let's look at what's happening in the rest of the world. You know, there is a global monetary shift happening. I talk a lot about it. I know you're familiar with it. But when you step back and look at what's happening across the global south, you got central banks buying gold hand over fist.
Mhm.
It's funny because central banks, by the way, as a footnote, came out and said they bought more gold, or the reporting was that the banks bought more gold in the first quarter of this year than ever before, ever.
Mhm.
But the World Gold Council just came out and said, you guys are lying bastards. You actually bought 15x more than you said you bought. You didn't buy the 16 tons you said you bought 240 tons. There's no question that gold is being ramped up by the most well-informed traders in the world. And at the same time, I've talked a lot about, and probably with you, the new payment systems that are emerging, the
Mhm.
cross interbank payment system, SIPs, the M Bridge. These are both operational. And you have, without prejudice, more trade happening outside the dollar than ever before. I guess my question to you is, are these isolated stories or are they all chapters of the same book? In other words, um, you know, are these one-offs, or are we seeing a new shift to perhaps a new monetary system to not replace the dollar, but to run alongside it? Yeah, and I don't think China wants to be the world reserve currency because they understand that you can't have a manufacturing base if you are, Triffin's dilemma. But I think the rails are being set up, multipolar rails, for countries to use their own currency as much as possible for trade, settling imbalances in gold through all these multi-jurisdictional vaulting systems we see springing up all over the global south. The Shanghai Metals Exchange has aspirations of placing throughout the entire Belt Road Initiative. We see the new one that just opened
Singapore.
up in Singapore, and one in Hong Kong that just opened up the other day for price setting. Now you're going
Mhm.
to have a challenger to the West for the first time, where Hong Kong, and much like um, United Arab Emirates, where it's same day settlement, and Singapore, these exchanges are being built to challenge the Western hegemony. Maybe they don't want to be world reserve, but I think that they want to be responsible for their own monetary affairs rather than bolstering ours. It's an interesting time, to say the least. And I do agree with you. It is no question a shift to challenge the Western hegemony. And as far as gold is concerned, it doesn't need to replace the dollar. It just needs to be viewed as a alternative settlement vehicle. It is
Yeah.
already. You've seen that happen. As collateral. It is. You see that happening already, and I think it's kind of taking shape as you know a very important part of a new monetary system. I appreciate your perspective. So let's look at a big picture for a moment. So I don't know. I like your perspective. When historians look back on this decade, do you think that what do you think that they will say was the real turning point, moment that started
COVID.
this change? COVID, yeah, but that was quick. I wasn't sure what
Yeah.
you're going to say there. I wasn't sure if you say AI, if you were going to say, the war, COVID. I would agree that certainly did change everything, didn't it? It changed everything
Mhm.
for me, no question about it. Yeah, well, the you could argue offshoring all of our manufacturing was very disinflationary as well, and
Yeah.
um, I think they're trying to reindustrialize the country. So while that will be disinflationary, just as disinflationary as shipping all of our manufacturing outside the country, hollowing it out, I can't imagine that it's not the opposite of that, reshoring it. And
Mm.
so there'll be that period of time that I could see there being a good deal of inflation in an attempt to reindustrialize, to bring back manufacturing, to do all of these things, even in the face of something like AI, which is very disinflationary, no question about it. Um, and at the same time, I think that it's very difficult for me to see how they can, in any amount of time that would be considered quick, pay down the debt burden that we have, especially factored into what you said about the
Mhm.
fertility rates. Um, when you're talking 40 trillion on top of another 160 trillion in unfunded liabilities. And if they were to let rates rise, if rates were to rise on their own, we run into a very, very big problem. Austerity to me is off the table. There's no way they can do austerity and normalize the balance sheet and let rates rise as if it were an organic situation to clean out the excess. If you do, you break everything through years of suppressed interest rates. You break the bond market, the stock market, the pension market, the real estate market, the insurance companies loaded with pension with treasuries, etc. I think they have no choice but to fall back and choose inflation as a pathway. And if you do reindustrialize the country, as he is trying to say, Triffin's dilemma says you cannot have a strong dollar. You can't. So I think ultimately Warsh wants a weak dollar and low interest rates. This is how you would A, pay off the debt, B, you would reindustrialize. In order to reindustrialize and have a shot at selling products to the world, you cannot really have a strong dollar. So I think inflation is the path that they will choose, regardless of how disinflationary or flat out deflationary this massive technology is, and it is. And I don't think we really know how much that will play out, but I think inflation will be much, much worse before it gets better over time. With reindustrialization, with setting all the infrastructure up, with paying down the debt, with actually bringing back manufacturing, I think you could start to produce your way out of this problem and bring down inflation. But I think for the foreseeable future, inflation is, if I had to guess, will become a very ugly word over the next few years. And I don't see any way around reindustrializing this country, reshoring manufacturing with any hope of actually selling those products without inflation and a weaker dollar and lower interest rates being at the forefront. Well, and that's what they want to do. And I think it's one last point, and we'll say goodbye. But I was listening to Luke Groman talk about this, and he made a very interesting point that I did not know. He said there was actually more manufacturing jobs, mind you, a lot of them in the green space, created under Biden than under Trump. And his point was that the desire to reindustrialize is above the president's pay grade. It's coming from the military industrial complex. It's a national security issue. So if you do aspire to reshore manufacturing, you must, in essence, soft default on the reserve status. This is where the Genius Act comes into play. This is where you look at a company like Tether, who's bought more gold than anyone in the world except the Central Bank of Poland over the last couple of years. How is that playing into it when they're taking the interest that is not transferable, buying gold with it, which devalues the dollar, pushes gold higher, which is how you devalue the dollar, which allows you to reindustrialize, which allows you to reshore, pay down your debt easier, and sell your product to the world. In other words, you mentioned at the outset, you don't see the dollar down. I think, like the Swiss, when the Swiss stayed out of the European Union a long time ago, 2000-ish, they had to decide we're a tiny little export nation surrounded by a giant conglomerate amalgamation of countries that buy from us. We sell our products to them. And at some point, if you have to first convert to a very expensive Swiss franc, you give up the accuracy of the Swiss watch and you buy it from France, or the sweetness of the chocolate and buy it from Belgium, because it's prohibitively expensive to convert to a Swiss franc. And I told everyone at that point, because our business started with Swiss franc investments, I'm like, get out of the franc right now, bring your gold home, or convert it into gold and bring it home, and gold was $400 then, or under 300, even less, 250. And the Swiss franc has only appreciated, I don't know, 10, 15, 20% since then, because they told the world they wanted to remain autonomous, right? But they had no choice but to peg their currency to the euro, or their economy would have died. In other words, you cannot sell your product when your currency is prohibitively expensive. That is basically what Triffin's dilemma says. Now, it was important for the Swiss as an export nation surrounded by countries that were changing paths to a new currency, so no one would buy from them if they had to first convert. Well, that's the exact same thing here. So that's why I ultimately believe that no matter what they say, if reindustrialization, if becoming the engine of manufacturing again, in attempting to consume more than we produce, for the first time in 50 years. If that's what they want to do, then inflation is absolutely in the cards. And regardless of how disinflationary AI truly is, I think the shift towards moving towards a more productive country through manufacturing, we have no choice but to let the dollar slide. So that would be my guess. You save in dollars, you're holding a melting ice cube. You use dollars for transactions, you save in assets. And similar to what we talked about at the onset of this. But you're a fascinating guy, man, and we got to do this again, Aaron. We really
For
do.
sure.
What's the best way for people to follow what you're doing? And will I see you? Are you still in Vancouver? Will I see you at that VRIC in January?